This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pashardis. Thanks for joining us at XM.com. It was a wild session in financial markets. The dollar took a hit initially after the ADP jobs report disappointed, only to stage a massive comeback after the Fed's vice chief talked about rate increases and the ISM Services survey hit a new record high. The Fed's second-in-command, Richard Clarida, said that the conditions for raising interest rates could be met by late 2022. He also stressed that the economy has made progress towards the goals required for tapering asset purchases. As for the dollar, this is great news. The Fed is slowly but surely setting the stage for dialing back stimulus. For now, everything hangs on tomorrow's non-farm payrolls. The labor market needs to come back in spectacular fashion for the Fed to take the next step soon. In the big picture, it doesn't really matter whether tapering is announced in September or December. What matters is that the Fed is years ahead of the ECB and the Bank of Japan in the normalization game. Ultimately, this argues for a stronger dollar against the euro and the yen. The main event today will be the Bank of England decision. The UK economy is humming along nicely, and a couple of Bank of England officials have recently called for withdrawing some stimulus, but it is probably too early for that. Most policymakers don't share this view. They believe that withdrawing stimulus too early would be an even bigger risk, as it could hamstring the recovery, especially now that the government is also phasing out its jobs programs. The reaction in sterling today will depend on the votes around QE and the updated economic forecasts. The most likely conclusion is a 6-2 split vote, where most members favor keeping their asset purchase program intact, coupled with some rosy macroeconomic forecasts that might be enough to lift the pound. Meanwhile, the meme stock madness has returned for another round. This time it was Robinhood, whose stock soared 50% yesterday. In the commodity sphere, gold soared initially as the ADP report disappointed and the dollar got hammered before surrendering those gains once Clarida spoke. Finally, oil prices took another beating yesterday after a surprising build in U.S. crude inventories compounded fears over a slowdown in demand. This is today's Daily Market Comment. Thanks for joining us at XM.com.